Right. Good morning. Good afternoon, everyone. This is Ryan Derks. I have a portfolio market update for everybody. I just want to go over a few stocks that I'm keeping my eye on that you may be interested as well. Before we get started, do not forget this is not investment advice unless you are a client of Derks Financial. Otherwise, you should just call us directly. So, without spending too much time at all, let's get right into what I wanted to cover and show you guys today. It is earnings season. And we have a lot of great earnings to go over. You can see today the market is rocketing upward because about 15 to 20 billion-dollar plus companies have been reporting this week, and they have some good numbers. So let's start off with Ferrari. A few days ago, they announced that not only did they whoop and beat down earnings and then far exceeded expectations. Their shipments are up 7% year over year. Their revenue is up 10% year over year, and their operating income is up as well. The CEO of Ferrari, he had said some great things, as you can see here. Um, right here, if you read this article, the CEO describes where them raising prices on Ferraris have not been affecting even still, and they still, as of right now, still have very strong orders. For those of you who aren't familiar, that is actually a really big deal. Lewis Hamilton is one of the best F1 racers of all time. He has been with Mercedes his entire career, and yeah, he announced actually along with their earnings that he'll be making that change. So you can see since January 1st, so last month, Ferrari's been doing very well, up 12%. Let's keep moving. Here's Microsoft. Microsoft had their earnings recently this week as well. And again, they blew the lid off. Even though their stock was down after hours, they're doing fine right now. We'll show that in just a moment. But here's a couple of things that were important off of their earnings. Their revenue is up 18% year over year. Their operating income up 33%. Net income up 33% as well. The cloud, Microsoft's cloud service is what exploded the most. Revenue to 33 billion, up 24% year over year. That is awesome to have that type of growth. They had said also what the other thing was AI. We've moved from talking about AI to actually applying AI at scale. I don't have the infographic, but Facebook and Microsoft are two of the biggest buyers right now of all various computer graphics chips that's being used for AI. And I'm sure Apple and the rest are in there, but Microsoft and Facebook were far, far, far and away the number one. And that's about it. Honestly, that's about all I'm going to spend time right there. If you wanted a visual, I won't stay too long, so pause the video. But if you wanted a visual of where, oops, that's Apple, of where Microsoft makes all their money, you can see here. Here on the left side, you can see the different services they have. This little number, this little percentage right here. This shows how much it's been growing. So pretty awesome for Microsoft. And again, their stock price doing pretty well this year, up 10% so far this year. So not bad for them. Next, we've got ADP, a sleeper in my opinion, a really, really awesome company, but a sleeper. So their earnings, again, up 6% year over year. Earnings per share, which is a very awesome data point to look at, up 9% year over year. These guys are awesome. They are very consistent, and they're doing very well this year as well, up 7%. Not bad. Visa came out what was actually that was a while back. That was about a week and a half ago. They kicked off earnings season, if I remember, one of the first big companies out there. Again, you look at these three check marks. Visa's revenue increased, their adjusted earnings per share increased, and the volume increased. So again, Visa's doing very well. Their stock price reflecting that as well. Since January 1st, up 7.5%. Not bad. We've got Apple. Apple is kind of the stinker, although honestly, it wasn't even that big of a stinker. It was just really their China revenues weren't that great. Their various services like cloud and the App Store were doing great. Their various iPhones doing okay. Their computers not so great, but like by like a fraction of a percent. So even the China thing, it wasn't that bad. Although the China revenues were down 11%. So not great. You don't want to see that. But it's Apple, and they can definitely make do. Again, kind of like I showed you on that Microsoft infographic, if you're very curious about how it works, where they're making all their money and how it's growing, you can see right here, iPhone sales are growing. And then right here, this is the big one, services. That's cloud storage, that's app store, that's you using Apple TV, downloading Apple Music, that kind of stuff. That's actually their fastest growing segment. It's been that way for a couple of years now. Apple stock kind of flat this year, but those of you who know Apple, you know they'll probably be fine. United Health Insurance. United Health Insurance reported about a week ago. Now, here's the thing. They actually did really well. Earnings per share growing nicely, revenue growing really well. But there has been some speculation, not actual real results, but just pure speculation by analysts and whatnot, that the health insurance industry this year is going to have some difficulty just with higher claims and the increased cost of healthcare and whatnot. So far, that has not showed up. They're actually down right now this year, which I actually think is a really good buy-in opportunity, because here's United Health. If you want to visualize how their company looks, company health looks, their revenues are awesome. Their free cash flow is awesome and growing. This is a 10-year chart. Their earnings per share is awesome and growing. Cash on hand and debt management, awesome. Their dividend and growth, awesome. Shares outstanding, shrinking. They've got a decent management of expenses. So I'm not too concerned. Like I said, I'd say if anything, that's a kind of a buying opportunity. And, also, when you look at these, pretty much every stock, in fact, yes, every stock we've gone over so far looks very similar to these revenues, these cash flows, these earnings per share, dividends, all of this. Very similar charts. So lastly, GameStop, a little update from GameStop. They have not had their earnings yet. That comes out in about another 30 days or so. However, if you Google search, and let's just do it, we could just Google search GameStop stock, and we'll just look to see what kind of news we get. A lot of it ought to be pretty negative, because that's what you see quite often recently. But here's an interesting development. This was as of September 30th. We're looking at Vanguard, BlackRock, State Street, Charles Schwab, Van Eck. They are all, look at this right here, all of them increasing the amount of GameStop shares they currently own. Nuveen increased their number of GameStop shares on hand by 44%. Charles Schwab bought 12%, increased their holdings by 12%. Vanguard and BlackRock up 1.5% and 4.5%. So that was as of September 30th, okay? That was last quarter. How about this quarter? Well, have a look here. They're increasing even more. So Vanguard, this one right here, shows a decrease in shares. However, if you look down here, they've got a few funds that right down here where they increased shares. So you've got BlackRock increasing, iShares increasing, State Street increasing, Vanguard, Charles Schwab, Spider Funds, Fidelity, Van Eck again, Nuveen, Principal. You've got a lot of people here who are increasing the amount of shares that they currently hold of GameStop. And if we look at GameStop stock, it's not like the stock price has exploded in the last 4 months or anything. It's been pretty sideways. So that's a very interesting little data point. Never forget, you guys, when it comes to talking about GameStop, here's something you should know. GameStop has no debt, over $1 billion of cash on hand, 5 years of improving earnings per share and about to go positive. They have a CEO and chairman that take no salary, and the insiders have been buying stock consistently for about 2 years now. Yet it continues to be one of the most shorted stocks in the market. And I think, if I'm not mistaken, it's been like almost 200 consecutive days of more than 50% of the shares being shorted. So anyway, that is it for right now. I just want to give you guys a quick little update on this, on some various stocks and whatnot. You guys, if you ever have any questions, give me a call, email me. But that's all I got for you right now. Take care.